Why Golden Was Doomed, Honey Crullers Revisited, and Currency is a Bitch. Welcome to the Unlimited Supply Podcast, your daily music business TLDR in your ear, powered by a tornado of queeners and rods, and brought to you by No Disc, helping music, technology, and finance companies navigate the music industry in partnership with Digital Music News. It's February 6th, 2026. I'm Lars Murray. It's Finance Friday, but before we dive into the shallow money trench, it wouldn't be Friday without a shout out to Glenn Peoples' The Needle Drop Substack. This week, Glenn took a dive into the mechanics of the Song of the Year Grammy and why he was quite sure that Golden from K-pop Demon Hunters wasn't ever gonna win. It's an entertaining read that takes you through the history of the award, reminding us of some of the winners and losers. Hey, even Despacito didn't win Song of the Year, and why Golden was doomed from the start, and why Song of the Year might not be such a flex. Now let's dive into the shallow money trench where thieves and pimps run free. Buried in the Power 100 Grammy hullabaloo last week was a new Billboard Power list. This one doesn't really shilly-shally around with things like creativity and culture and musicianship. Nope, this one dives right into the shallow money trench. It's the Billboard Finance 50, a listing of the finance Power 50 in the industry, their accomplishments, and their favorite music to make them seem a little more human. It's a much-needed list given the oceans of queeners and rods flowing into the industry from Wall Street and beyond. The list is divided up into two groups: the money, the folks with the enormous hills of beans, and the advisors, the people sherpaing them around to make sure that those hills of beans are not wasted. It includes a lot of names you hear frequently on Unlimited Supply, especially on Finance Friday, like Paul Sipio of Apollo, Fred Davis of the Rain Group, and many more. Of course, the Finance 50 are united by one common factor. Is that piles of money? Is that business acumen? Well, yes, both, but also it's extremely mid-music taste. There's a lot of AOR in there. The other notable attribute of the list is its omission of companies that are providing loan and advance financing to artists and labels rather than making equity investments. Companies like our sponsor, Roy-Fi. I nominate Peter Harvey for next year's list. An entire village of Billboard reporters shared the writing. Ed Christman, Elizabeth DIlts Marshall, Krisitn Robinson, and former Billboard editor-in-chief Hannah Karp all pitched in. There's a somewhat troubling sign on the horizon for all of these newly minted music money men and women. That would be Spotify's recent stock performance. Tech stocks sneezed this week, down 1%, and Spotify caught a cold, down 19%, which really wouldn't be that big a deal if it didn't mean that Spotify has lost all of its 2025 gains and then some. It started 2025 in the 460 range, blasted to a peak of over 770 in June, and now, as we write of this on Thursday afternoon, it's all the way down to 406, and this is after Spotify raised its prices. Yikes. Good thing some people cashed out in late 2024. Here's a flashback to December 2024. And as Spotify bumps along just under $500 a share, there's been a lot of cashing out. Personal 2024 cash out is now at about $320 million. Longtime listeners will recall that here at Unlimited Supply, we love to provide perspective, by which I mean donuts, specifically Canadian donuts, and more specifically, Tim Hortons Honey Crullers. Don't ask me why, just go back and listen to our June 7th episode. Anyway, that $320 million is roughly enough money to buy the entire Canadian population, infants to centenarians and everyone in between, somewhere in the neighborhood of 9 to 10 Tim Hortons Honey Crullers apiece. Yep. Many delicious Tim Hortons Honey Cruller futures have been won and lost over this past year, and a whole bunch of Spotify execs got out while the gettin' was good, at the risk of beating the bakery metaphor to death. Pepperidge Farm and Unlimited Supply, remember. None of this seems to have put a damper on label and publisher earnings, though, at least not yet. Earnings Palooza kicked off this week. On the publisher side, moving from small to large, let's start with Reservoir Media. Reservoir's revenue ended up 8% up to three beefs at $45.6 billion, while EBITDA increased 11% to $19.2 million, but currency is a bitch. Net income was cut almost in half to $2.2 million from $5.3 million a year ago, largely due to swap valuation and interest expense. Marc Schneider had the coverage over at Billboard. Moving up the ladder a couple of notches, Warner Music Group had its earnings call yesterday afternoon. Depending on who you ask, the results were good or mixed. Top-line revenue was up a fairly healthy near two queeners to $1.84 billion, a billion or so behind Sony, but we'll get to that in a minute, up 10% year over year. Net income, though, was down and was a miss on guidance, mostly due to that pesky currency stuff. Did we say currency is a bitch? One place where it performed actually pretty well was streaming revenue, which was up 12% year over year. Physical grew 8%. It was a little off of last year's physical growth numbers, but that's a pretty healthy streaming number. On the call, Warner put a lot of emphasis on their AI partnerships, which is the flavor of the month for investors. Apparently, their Suno partnership is already throwing off cash, but the others, Stability, Clay, Udio, well, we'll see. In the meantime, it's probably more important that WMG picked up a percentage point of streaming market share year over year, and that translates directly into both recorded music and publishing revenue. New albums from Bruno Mars and Zach Bryan won't hurt either, though the Warner Superstar flywheel still isn't close to Sony's and UMG's. Still, on a bad day for stocks, WMG didn't sustain much damage. At the end of the day, it was off 5%, while UMG, for perspective, was off 6%. So WMG beat the market for a day at least. Moving another notch up the market share ladder, up near the top of the market share hill, Sony Music racked up its first quarterly triple queener. Yes, Rob's house ticked over $3 billion for the quarter for the first time ever. The $3.01 billion figure was up double digits, 11% year over year. Recorded music was up 11.2%, but the eye-popping number was the other category, which generated 5.83 rods, $583 million in calendar Q4, up 28% year over year. That's all the live concerts plus merch and license revenue with public performance, broadcast, and sync. All of that other stuff is particularly notable juxtaposed against streaming revenue, which was up only 5.1% year over year. Remember, Warner streaming growth was double that. One way to look at it is that clearly Sony doesn't want to be dependent on Spotify, and it appears to be making the right moves. Of course, Sony Music is buried inside Sony Corp, so the stock price isn't a factor here, but I'm sure Rob Stringer and Kevin Kelleher are sleeping very well tonight. Tim Ingham had the breakdown over at Music Business Worldwide. And that's about it for Finance Friday. Support for Unlimited Supply is provided by the aforementioned Roy-Fi. If you're a label distributor or publisher and you want to take advantage of other people's money and other people's technology to provide advances, let's talk. You know where to find me. Roy-Fi offers the best rates and terms in the space and is mission-driven to give artists the independence they need. Our Unlimited Supply song of the week comes from the band Twen, not the rapper, the indie rock band Twen. I'm going to see them tonight at TVI in Bushwick. Hopefully, I'll see you there. I'll be pre-gaming at the bonus room. The song is the title cut from their album Fate Euphoric, and it is pretty euphoric. You can check it out in the Unlimited Supply playlist on Spotify and Amazon Music, and be sure to turn it up loud. If you like what you hear, please hit that follow button wherever you get your pods. I live for your praise and encouragement, but it really helps a lot more if you drop us a rating and or a review on Apple Podcasts, YouTube, or Spotify, and tell a friend or three, preferably 21 times, because according to marketing whiz Susie Schultz, it now takes not 5, but 21 times for anything to sink in. Links are in the show notes, but you can also visit unlimitedsupplypod.com to sign up for our newsletter, to tell us what you think about the show, to suggest feature ideas, to feed us info, to feed us lunch, to call us out on our dubious assertions, and to tell us what we're missing out on. In the words of the great philosopher Ed Rivadavia, don't let your short-term greed get in the way of your long-term greed. And remember, in this business, no conflict means no interest. And to end the week on a more somber note, I want to pay tribute to an old friend and colleague. I worked with Tracy Zamot twice, side by side, shoulder to shoulder, sharing the same foxhole when the artillery shells were bursting all around us, figuratively. The first time was at Virgin Records in the mid-2000s, and then I was very excited when she joined Pandora in 2015 to be our publicist on the music industry side. Tracy was sharp as a tack, fast on her feet. She took no bullshit from anyone, and she was also funny as hell. And she had excellent musical taste. She was also devoted to her late husband, John Loscalzo, a bright light himself in any day, who was tragically taken 10 years ago, and to her daughter, Gracie. Well, we lost Tracy this week. She was only 55, gone way too soon. Thanks for the laughs and the support and the advice, Tracy. Rest in peace. You certainly deserve some.